So let's do the news and motor through this stuff. So you okay, Eusebio?
Yes, I'm okay. I'm ready, indeed.
Okay. So first up, we've got this thing here, which is our critical items. Anything needs to change here, Eusebio?
No, because we are still under the same problem. So, for me, the coronavirus problem will stand here in Europe for several weeks, several months, probably. I
think a year and a half easily.
Yeah, 3 months, minimum 3 months, indeed.
Yep.
And so, but the big problem will be after the epidemic. How will the economy be impacted? Because there is a difference when one country, two countries are in a big recession, but it is another problem when the entire world enters into recession. And so this may be a big, big problem. So.
But also it could save the Earth.
Yeah, of course.
From climate change, which people didn't believe either.
Well, that's true.
Yes. And now Venice's canals are all cleared up. So, okay. Yep.
Yeah. But for all the other problems, no, there are no other problems, and all the other problems are still true. But I don't see a new items to add to this list.
Okay, thank you. So let's go over to the calendar and rip through that. So all yours, Eusebio.
Okay. Perhaps one thing I could add in the geopoliticals is the future of the European Union, because this coronavirus problems is indeed showing that the European institutions and regulation or rules simply do not work. There is not that cohesion as it is theoretically considered, and so this could be a major problem for the cohesion of the European Union and so of the euro. So very important problem to consider.
Okay, so in the link here, so I put it under long term, perhaps.
Yes.
Okay, will do. Right, cool. Thank you. Good point. Or it could suddenly bring everybody together, but I doubt that. Right. News, Eusebio. And Dan is talking about lines at drive-throughs. Sure. Yeah, okay.
Okay, so let's go. On Monday, so are you at the top of the calendar, Chris? There is no Sunday? Okay, so Sunday there was nothing. Okay, so on Monday, I will monitor the Euro-German Bundesbank monthly report as usual. Then we have the card wholesale sales month-over-month, so major.
And just so people know, again, we're not doing the bias anymore. If you're using the bias, let us know, and we can reconsider. But so far, this is the third week, and nobody has complained about it except Dan, of course. Sorry, Dan. And Peter asked about it as well, but it was more inquiries rather than, hey, I rely on this. So if somebody is relying on it, let us know. But yeah, okay. But it doesn't seem like many people are actually using it. It was hard to describe, and it slowed things down. So carry on, Eusebio. Thank you.
Okay, that's it for Monday. On Tuesday, we have, I will monitor the Japanese Bank of Japan core CPI year over year, because in this problem, the year over year inflation can be possibly impacted. So,
yep.
Then
I'll scroll down. Okay.
I will monitor the FPC for the pound, the FPC meeting minutes and the FPC statement. Then
what does FPC stand for?
It's the Bank of England. It's an abbreviation which means I don't remember all the acronyms, but it represents the committee of the Bank of England.
Financial Policy Committee. Okay.
Yeah.
Kind of important.
So then we will have the US dollar flash manufacturing PMI, so major. We will have also the US dollar flash services PMI, major. And the Kiwi trade balance, major higher time frames.
Okay. And Wednesday we have, there's only about 60 news items this week. It's a quiet news week.
So on Wednesday...
Normally there's about 90, in case you're interested. Yep.
On Wednesday, so we have, I will monitor the pound CPI year over year for the same reason, and the core CPI year over year. Then we will have, for the US dollar, the core durable goods orders month over month, major.
I think this has got coded. Nope. Yeah. Okay, sorry, what was that one?
The core durable goods orders month over month for the US dollar, and the durable goods orders month over month too.
Okay, monitors.
Then, in this context, I will monitor the Swiss SNB quarterly bulletin, and of course the US dollar crude oil inventories.
Okay.
And that's it for Wednesday. On Thursday, of course, we have the German GfK Consumer Climate Survey major. I will monitor the European Economic Bulletin, the ECB Economic Bulletin. Then we have the Euro M3 money supply year-over-year major, higher time frames. Then we have the pound retail sales, month-over-month, major.
Just
then
major, you're not going for...
No, the retail says major, simply.
Okay. Alrighty. Are the others going to change as well?
No, the other will be good. So major plus higher time frame because it is the Bank of England official bank rate.
Okay.
If they do not cancel that meeting because they have already made a decision last week, an unexpected one. So we have to follow that.
Yep.
So next week to watch, yeah.
Yep.
And I will also monitor the US dollar final GDP quarter over quarter, as well as the final GDP price index quarter over quarter.
Just monitors.
Monitor, yeah, because it is a final GDP.
Okay.
And monitor the US dollar natural gas storage.
Yep. Okay, scrolling down.
Yeah. And similarly, no, don't go too fast. I will also monitor the Tokyo core CPI year over year.
And nobody speaking.
No, indeed.
Really interesting. Okay.
They are occupied to coordinate all their actions all over the world.
Yeah.
On Friday, I will monitor the Bank of England quarterly bulletin, of course.
Okay.
And then I will monitor also the US dollar core PCE price index month over month. And that's it for Friday. And note that in the middle of the night between Saturday and Sunday, we have the daily saving time most here in Europe. So.
Yep. But not till next week. Not till next week.
No, between Saturday and Sunday at the end, in 1 week, in fact, in 1 week.
Yep.
As it is indicated in the calendar.
Yes. Hey, Copal. Nice to see you again. And Brad.
Now, Chris, now as a general remark about these news, especially for the major higher time frame, if we have a big surprise in one of them, do not necessarily expect big movement because many bad things have been already considered and are already priced in the different pair price. So I will attach less importance to these news, most of them at least, than usual. So.
Okay.
Because we know that if we are all entering into a recession, every numbers will be necessarily negative, but we can anticipate that. It's not difficult to anticipate.
Okay, cool. Hi, Ingrid. And right, so if nobody has any questions, sorry, I do the incantation. Anything marked with H4 plus, where's my mouse, refers to higher time frames from the H4 above. Don't place any trades 1 hour prior, get out of them within half an hour. anything marked with major applies to the rest of the time frames, the smaller ones. Again, don't get into them within 1 hour and get out within half an hour. This is to protect your account, not the profits. That's if you're trading. If you're already up quite an amount and the news comes out, and you're doing something like standard or SAM with lots of scalping going on and you've got lots of units open, close off some of your units to protect your account, just in case there's a lot of volatility. In the past, before the beginning of this year, things were really quiet. So what I've been saying, I wouldn't say it didn't matter that much, but wasn't as critical. But in the way past, around about the last crash, GFC, global financial crash, there was a lot of volatility when the news came out, and so accounts could be destroyed at that point. We're getting into a lot of volatility again, so it could be, so just be more careful of our warnings about that. Okay. What else? Okay, I think that's it. So a little bit of good news, if you consider it that way, is the average daily ranges have been much bigger, unsurprisingly, but we're up to 2.4 now, and we started off the year around about 1,300 and then dropped down to almost under it, like we were last year, under the thousands, and now we're getting better. Still not as good as it was back in the global financial crash days, when these were up around 3 to, the pound yen was trumping around about 600 pips per day on average, but getting there.
Yeah, but we need to be extremely prudent. The fact that the average daily range increases is not necessarily a good sign, and a sign that things are improving for Forex trading. But there is something else we have also to consider, the volatility of the market, and we are in a completely different situation than in 2008. If you take one of the most volatile pair, for example, the pound kiwi, and you look at these last days during 1 or 2 weeks, we will see very ample movement, 400 pips, 500 pips, 1,000 pips one day, but with a lot of volatility and important pullbacks. And when we have a high volatility with important pullback, this makes trading of trends way more difficult. In 2008, we had ample movement, but with a volatility which was, of course, important, but not as important as today. And so it was easier to trade big movement. Nowadays, these big movements are more difficult to trade, in fact.
Yeah, they're much sharper. So that's why I wanted to bring up this first part of the session, just to let you be careful. I did poach some of this information, seeing as we've kind of gone off topic. We'll come back to the NewsWatch, from John Carter, so give him props. He's a futures trader. He says that moves on the futures market that were used to take 3 weeks now take 3 hours. That back in 2008, when the global financial crash kicked in, it took about 1.5 years to unwind that. So far, it's taken only a month or two to do as much damage as it did back then. He also said that at the moment, businesses are just crash stopping, so they're closing down straight away. Kind of like 2001 with 9/11, when all the aeroplanes just dried up immediately and went bust over 2 days. This is happening to a lot of businesses right now. So instead of business sort of dying out slowly over 12 to 18 months, it's happening kind of immediately, because people aren't going out, people aren't able to buy stuff. But yeah, we'll see how that goes. So okay, so Eusebio, while we're on this side of things, if the volatility is so large, he is said to reduce your position size. Okay, use a smaller account per order, and have a wider stop loss.
Yes.
Yeah.
Not necessarily because of larger move, but because of a higher volatility, in fact. The fact that we have ample movement is not necessarily a reason to increase the stop loss size. The key point is the volatility. Higher is the volatility, larger our stop loss should be in order to avoid being stopped out unnecessarily too early, in fact. So this is the volatility is important, the key point.
And the volatility you can see on a 5-minute chart with all the wicks that are appearing.
Yeah, so in any time frame. We can see that in any time frame, by the way.
Okay, we'll call up some of those. And in the chat here I see, hang on, Dan has said that US unemployment numbers will be skewed. Yeah, especially since Trump has said don't tell anybody what they are. Excuse me, bit of COVID. Early morning. I have to stop doing those cigars at night. And let me see what else. Okay, so Dan has given me this link. Sorry, I can't bring it up in here, otherwise it's going to mess up. Where is it?
And by the way, Craig, the reserve I have in coffee and tea, because I drink also tea, I have for easily 4 months. And if I make some restriction, that reserve can last 6 months. So I have no problem of coffee and tea supply.
And if anybody's worried, just contact Eusebio because he has enough toilet paper to help everybody out, I think. That's what he keeps telling me. And there is a new cryptocurrency out now. I think it's called Bitcoin. And there is something else that's popping up here which will help with payment plans and stuff like that. And it goes like this. Okay. Enough silliness. Back to work. Okay. Thanks, Dan. Yeah, I'd heard that Trump had said told people not to say anything, so it looks like they've made it look a bit nicer. Okay, so I'll drag this off. And what else have we got to do? Okay, so we'll go a bit more over the stop loss. Also, entry and exit tolerances, because things are a bit more wicky these days, and I've been doing that during Brexit on the pound, keeping my exit tolerance a bit larger so I don't get smacked by wicks when I have a nice breakout. And I think, okay, I'll get in here within 2 or 3 pips. Several times I got in and then price just turned around against me, so I learned to increase my tolerance so I wouldn't get caught by those things. It does make things a bit trickier and makes the stops larger, and if you're using MTM, it reduces your position size, but it's better than losing your position. And I did notice that, Tariq, people lined up outside a gun shop. I think that with all the people stuck inside, I've heard that police are noticing an increase in domestic violence. So with all the teenagers and young people sort of cooped up, things might get kind of messy. And okay. Right. Okay, so we'll come back to this, but let's just finish off the news. So the pairs this week then are going to be from the top 10. So they're all over the $750 mark, like twice as much. So really good. For the moment, at least anyway. I thought maybe the spikes we had on the Kiwi and stuff might have been flushed out, but everybody is sort of in the party right now. So let's do this. So for news from Sunday, there's none, and on Monday we have the CAD, Eusebio.
We have only the CAD, so the first pair to consider will be the pound CAD.
Yep.
Then the pound yen. And then...
Oh, sure. Okay.
Yeah. And then the pound Kiwi or pound Aussie.
Right. Next bit is nothing left over from Monday. On Tuesday we have the pound.
So
oh, no, we don't.
pound,
We have the US dollar. Sorry, only the US dollar, Eusebio.
US dollar,
It's
here,
monitor.
okay.
We only go for the majors.
So
Yep,
the first pair will be the pound US dollar.
Oh, and add the Kiwi because this...
Yeah, let's
Oh, no,
add the Kiwi too.
it's close. Sorry,
Yeah,
I thought
but
it was...
the market can anticipate. The market can possibly anticipate, so I will include the Kiwi. So the first pair will then be the pound US dollar.
Okay.
Then we can consider the pound Kiwi or pound Aussie.
Yep.
And then the Euro Kiwi or Euro Aussie.
So on leftovers from Tuesday is the Kiwi.
So the Kiwi again, so here and here, okay.
And nothing for Wednesday.
Okay, so we will have the pound Kiwi or pound Aussie.
Yep.
Then the Euro Kiwi or Euro Aussie.
Ooh, getting hammered. Yep.
Yeah. And then the pound yen.
Okay. So we've got no US.
And so we don't have the US dollar, but then we can add the pound US dollar. So let's say pound yen or pound US dollar. In such a way we cover the 3 sessions.
Just check this one. We've got US here, US, Asian, Britain, Asian. Yep, we've got, so leftovers from Wednesday, we have nothing on Wednesday. And on Thursday we have Euro.
So the Euro, okay.
The pound.
The pound, okay.
And the US.
The US, okay. Okay.
And that's it.
So the first pair will be the pound US dollar.
Yep.
And we can say pound US dollar or pound yen.
Okay.
Then the pound Kiwi or pound Aussie.
Yep.
And then we can consider the Euro Kiwi or Euro Aussie.
Okay. And leftovers from Thursday, nothing. And on Friday we have nothing.
So on Friday we have nothing, so we will have to consider the pound yen or pound US dollar.
Yep.
Then the pound Kiwi or pound Aussie.
Yep.
And then the Euro Kiwi or Euro Aussie.
Okay.
So except only 6 pairs, yeah.
Okay, and just, right, so this is the top 10 to monitor for the whole week based on the last 4 weeks' worth. These are the pairs to monitor on a daily basis based on which ones are tied in with the news really well. These ones are the ones that you go for first. They're kind of ordered, but like it chops down the number of pairs that you need to monitor so it can keep your head in a bit of space. And if none of these is really working, then you can check out the bottom line as well. And if nothing here is working, then you've got the whole list here to go through. But the thing is to pick pairs that aren't jumping all over the show. So maybe, we've been talking about it for a while yet, but maybe even drop further down in the list, perhaps, to things which, like these are moving reasonably well now, better than the best moving pairs were for the past year, like 1300 there, up to 1300, and these ones here are all over 1300, so these are moving better than any of the pairs were last year, even the best pairs. So find something that's a nice regular mover in here that you find comfortable trading, and that's not, hopefully not going to give you too many surprises. Okay, but good luck on that. I have this knack of being able to pick pairs that just sit there while the other ones are soaring or diving. Okay, Edward, yeah, there is, if these are not moving, yep, but you don't want the ones like Eusebio's been saying that are super volatile, like the pound yen, that are just screaming up and down and do make the big movements, but go up and take 5 steps up and then 4 steps back and then another 5 steps up, which just knocks you around a lot unless you're really into scalping. Okay, so if there's no questions on this, I'll save this for a starter anyway. Okay, and we'll move on to perhaps some more mitigation. So, and if you have any ideas or questions, please ask, and if you want to be unmuted, please, we're only here for about another half hour perhaps.